Welcome everyone to Bank Millennium first quarter 2022 results call. With us we have the usual guests or participants, Mr. João Brás, our Chairman of the Board, CEO, and Mr. Fernando Bicho, Deputy Chairman of the Board and CFO. Before we start, I would like to ask a rhetoric question. Who said that banking is boring? And hopefully either or the two gentlemen will be able to answer that, or maybe at some other opportunity, our participants in the call. Without further ado, I'd like to welcome Mr. Bicho. He will present results of our bank in the first quarter, and afterwards both gentlemen will be available for the Q&A session. Thank you very much.
Thank you. Good afternoon. Thank you for joining this conference on our first quarter results. We start with a snapshot on pages 5 and 6, where it is visible that in the first quarter the bank had a very strong operational performance with a strong increase of core income, which was of course driven by the significant increase of interest rates, but also by a solid performance in terms of fee and commission income, which together were growing at a much faster pace than costs. We also continue to have quite low level of credit risk provisions, and on the other side we still booked a significant amount of provisions for FX mortgage legal risk, and additionally also a relevant amount dedicated to settlements with amicable settlements with customers. As a consequence, we had a net loss of 122 million zlotys in the first quarter, which is significantly narrower than the one shown 1 year ago. But for the first time since the third quarter 2020, we have shown a pre-tax profit. If we exclude extraordinary impacts coming from the FX mortgage legal risk, the net profit of the bank more than doubled in the first quarter to 485 million zlotys. This was supported by significant growth of net interest margin, a significant reduction of cost to income. On page number 6, regarding some key balance sheet and business items, we continue to show a strong pace of growth of active customers, a growth of 129,000 year on year, a growth of 237,000 if we look just at online and mobile customers. We had a total deposit growth of 10% and a loan growth of 5%, and a significant decrease of the net FX mortgage loan portfolio by almost 29% year on year. Moving now to details, starting from page number 7, and looking at the top right graph, it is visible the improvement of the underlying profitability of the bank in recent quarters, and especially that the one in the first quarter 2022. Of course, supported, as I mentioned, by the increase of interest rates, but this also shows the capacity of the bank to generate organic results, which will gradually more and more cover the costs connected with the FX mortgage loan portfolio. If we look on an adjusted basis, the annualized ROE, excluding the costs connected with FX mortgage, reached almost 20% in the first quarter of this year against 10% in the first quarter of last year. On page 8, regarding the main financial highlights, apart from the significant increase in the normal profitability of the bank, excluding FX mortgage-related costs, we also would highlight the significant decrease of cost to income, which on an adjusted basis reached 35.5%, and the still low cost of credit risk at 40 basis points over total loans. On page 9, more details about net interest income, which had a strong growth of 25% quarter-on-quarter and 54% year-on-year, driven by the repricing of loans, which is also starting to be followed by repricing of deposits. But the different speed of the repricing led to an increase of the net interest margin in the first quarter to 3.77% from almost 3% a quarter before. In terms of net fee and commission income, we still showed a solid quarter, 3% higher quarter-on-quarter, 8% higher year-on-year, despite the fact that the market situation contributed to lower fees from investment products. On page 10, significant improvement of the cost-to-income ratio to 35.5% on an adjusted basis, 41% on a reported basis, with a total cost growth of 14%, but excluding the costs connected with the Banking Guarantee Fund, the cost growth was 7%, with a continuation of the optimization of the branch network and also a slight reduction in the number of employees. On page 11, asset quality remained strong, allowing us to have a cost of risk which is very similar to the previous 2 quarters at 40 basis points over total loans, and also with stable NPL ratio at 4.4% and without having any positive impact from sale of NPLs, which did not take place in the first quarter of this year. Regarding the FX mortgage portfolio, we continue to try to accelerate its reduction. In currency, the portfolio was reduced by 5% in the first quarter, or 19% versus 1 year ago. So this means reduction without FX impact, allowing us, together with the increase of the provisions, to continue to dilute the portfolio in total loans, reaching now slightly below 11%. We continue to strengthen the provisions for legal risk, as we already announced 2 weeks ago, with a charge in the first quarter through P&L of 451 million zlotys. In terms of trends, the first quarter was still positive in the sense that we managed once again, for the 4th consecutive quarter, to have a higher number of amicable agreements with customers than the inflow of new court cases. In this first quarter, we had a total number of amicable settlements of 2,281 against 1,568 new court cases. And the total costs of the amicable settlements stood at 124 million zlotys. As a consequence of the provisioning effort and the reduction of the portfolio, the ratio of legal risk provisions against the gross value of the mortgage, FX mortgage book, crossed 30% in the end of March. On page 14, regarding liquidity, the situation remained relatively stable, but with a decrease of the loan-to-deposit ratio to 81%. In terms of capital ratios, of course, they were impacted mainly by the depreciation of the bond portfolio, which has an impact on funds, and to a much lower extent by the net loss booked in the first quarter of the year. Still, we have a comfortable surplus over the minimum requirements. Moving now to the second part of the presentation regarding the business highlights of the first quarter. We would like to highlight the good dynamics in terms of the retail business and also corporate showing gradual improvement, translating in overall loan growth of 5% year-on-year, which is of course a depressed number due to the reduction of the FX mortgage portfolio, with a growth of 24% of PLN mortgage loans and 8% of the leasing portfolio. Debit cards grew by 163,000 in 1 year, and we reached 2.4 million active digital customers, and customer deposits grew 10% year-on-year. Regarding loans and customer funds on page 17, so the total loan growth, if we would exclude FX mortgage loans, would have been double-digit at 13% year-on-year, driven by PLN mortgages, with a smaller growth of loans to companies and consumer loans. This allows the continuation of the change of the structure of the loan portfolio with a lower share of FX mortgage loans and a higher share of PLN mortgage. And on the other side, customer deposits grew 10% year-on-year, with stable retail deposits and much higher growth of corporate deposits, with the first quarter decrease of retail offset by increase of corporate deposits. At the same time, investment funds have been subject to a significant correction due to the market situation, and as a consequence, in the end of March, the assets under management were 13% lower than 1 year ago. On page 18, some more details about retail. Of course, we already had some decrease in the origination of mortgage loans and cash loans. The numbers that we are showing here that correspond to disbursements show a reduction, still a very good, solid performance, because we originated 2 billion zlotys of new mortgage loans in the first quarter, just 7% below the first quarter of last year. And on the other side, cash loans with an origination of 1.1 billion, which stood 12% below the first quarter of last year. And this is a natural consequence also of the extraordinary events that we had during the first quarter in terms of the war, but also in terms due to the increase of the interest rates. Regarding the retail customer funds, it is visible to the start of some change in the structure of the deposits towards some recovery of the share of term deposits in total deposits. On page 19, strong numbers in terms of retail banking growth, in terms of number of customers that grew 45,000 in the first quarter. Also the number of current accounts growing at a significant speed, and also the number of debit and credit cards also growing strongly versus 1 year ago. The numbers of mobile banking show the continuation of breaking records, especially in this quarter. We would highlight the fact that at the end of March, we crossed another milestone of having 2 million mobile banking users. Just to remind, we celebrated our first million just 3 years ago, so it shows at which speed mobile banking is becoming a major channel in transactions and services to customers. On page 21, we continue to support clients in managing their money and introduce new functionalities in terms of e-administration projects, and also in help to Ukraine in terms of charity support, also adding new banks in the open banking services, and also providing investment advisory service through our electronic channels. Some additional numbers regarding digital can be seen on page 22. Regarding new current accounts, the share of digital channels in opening current accounts in the first quarter reached 32%. The number of current accounts opened in the first quarter online grew by 53% compared with the homologous quarter of last year. And in terms of cash loans, digital channels were responsible by 78% of the number of cash loan sales in the first quarter, and the number itself grew by 38% versus 1 year ago. Goody continues its development on page, as you can see on page 23, with 89,000 additional downloads in the first quarter and 3.3 million zlotys of cashback just during the quarter. And moving to corporate business on page 24, we have already loan growth of 4% year on year, with a relevant rebound in leasing, which grew by 8% year on year, and in other loans to companies by 4% year on year. While at the same time deposits grew strongly by 38%, and also with a trend of increasing of the share of time deposits in total deposits, which is natural when interest rates start to go up. Also, we see a strong pickup in transaction activity, which was especially visible in terms of FX transactions, and also in the pace of digitalization of client services. Numbers of leasing can be seen in more detail on page 25, so a growth of 12% of the origination in the first quarter versus the first quarter of last year, while factoring grew 3%. And as I mentioned, a significant growth in the volume of FX transactions by 27% year on year. And as we are showing on page 26, also we continue to support the business with building a comprehensive online offering for corporate and business clients, in which we would highlight that we had a growth of 49% in the number of small business accounts opened online since the fourth quarter of 2021, and also a 34% share of the digital channels in business cash loan sales just in March 2022. So these are the most important highlights of our first quarter results of 2022.